Hi guys, welcome back to my channel. In this video, we'll be talking about investing our funds, our hard-earned cash into a variety of investment options. Most of us go to work, we get a paycheck, and at the end of the day, we end up spending that paycheck onto consumer goods. We either buy a new pair of shoes, a new pair of trainers, therefore you have €100 spent directly on the shoes, trainers, a new jacket, some food, you go spend like €80, €100 for a meal on a weekend, and at the end of the day, at the end of the month, you end up spending a significant amount of your income onto things which are basically consumer goods. This is the basis of consumerism and of capitalism. When it comes to our money, keeping the money in the bank, although is a very safe option when it comes to storing your funds, of course, banks in the past were a good way of not only storing your money but also providing you with a profit, because banks used to offer a good margin of interest on your stored income. However, with time and as time progressed, the amount of interest banks started offering over the past years has declined, and therefore in recent years keeping your money in the bank subjects your income to inflation. Basically, what is inflation? Inflation is the idea that after an amount of years or even months, and as we have seen, the amount of prices in Europe has skyrocketed, not only in Europe but also in the UK. This is the direct cause of inflation. The concept whereby the money I have today will be less tomorrow and I will be able to buy less items with the same amount of money. If I have €1 today and I can buy, for example, 2 coffees, in the coming years with €1 I might not be able to even buy a packet of crisps or a packet of snacks. So your money over time depreciates, and this is the basic idea of inflation. Now, when it comes to investing funds, there are a variety of ways in which we can invest our income, including crowdfunding, whereby you can put your money into, for example, real estate in an online platform. There are a variety of online platforms. You can also invest in stocks and ETFs, and you can invest in the latest craze, which is the crypto market. Cryptocurrency, although might seem shady, it might seem extremely volatile, however, there's always profits to be made in the crypto market scene. When it comes to funding and investing, it's important to understand what you're investing in. A variety of investment tools, a number of investment assets have different volatility and long-term potentiality. For example, one has to understand better the idea of ETFs and stocks. When it comes to ETFs and stocks, of course, both might seem very similar to each other, but actually they are different. A stock is you putting a part of your income into a company, therefore you're buying a piece of the pie of that company, you're taking a slice of their cake, and you're also becoming a team player within that company. For example, if I buy a stock in a particular company, I become one of the investors who is investing and believing in that company, and I also believe that the company will do well in the future. Whilst when I invest in an ETF, basically an ETF is an exchange traded fund, which is not only a stock, but it is a pool or a basket of investments. It's a basket of various commodities. Therefore, when investing in ETFs, you're not only investing in the stock, in a particular stock or in a particular company, but you're investing in a group of stocks. And of course, if you're investing in more than one stock, it's better than just investing in one stock on its own. So ETFs, when compared to stocks, are less volatile, they are more safe in the long term, and offer, of course, a greater possibility of profit. When it comes to, of course, our modern times, it's important to discuss cryptocurrency. And what exactly is a cryptocurrency? When it comes to cryptocurrencies, we have the old forms of money, also known as fiat money. Fiat money is hard money, money that you go to an ATM and get your bank bill out of the ATM from. Whilst the cryptocurrency is a form of a currency which is non-tangible. However, it's a currency because it is valued. It has a value to it. It's encrypted. A cryptocurrency works on a blockchain. The blockchain basically consists of a variety of computers which are networked together and which are able to share data. Every time the data is shared, a particular type of data becomes encrypted by a certain encryption algorithm, and this encryption algorithm creates a unique protocol. The unique protocol gives rise to value, and by creation of the value in a particular type of protocol, for example the Bitcoin, we can create a particular currency from this value. From the beginning of the cryptocurrency world, from Bitcoin and Ethereum, in nowadays we have a variety of other coins known as altcoins. These altcoins, although might not be as strong as the current Bitcoin or Ethereum because they don't have a particular backing to them as of yet, have a future potentiality, and that's where the profitability comes in. Various altcoins in the current market, for example, you have Phantom, which has a great potentiality because of its market cap. Phantom is around 4 billion, so its market cap can provide us with quite a great profitability in the future if it rises. You have Solana, you have Avalanche, you have Terra, you have Decentraland, you have EVE. These cryptocurrencies, although they're not the standard Bitcoin and Ethereum, which eventually will always possibly do well, and although there are dips in the market, holders and long-term investors, this is where the profitability comes in. You also have to look at the altcoins, because altcoins, although might be more volatile, might also provide a form of potential for us to have a greater profit in the future. So investing in the crypto market requires quite a lot of background work. Going onto a platform, throwing your hard-earned cash onto a particular coin because here you hear something on YouTube or on Google after a small Google search, and you think you're gonna make some decent profits just by, investing your money onto a particular coin. That's not how it's done. Investing requires a background amount of homework. Now, when it comes to a variety of platforms for investing in cryptocurrencies, there are various amounts of platforms one can invest in. For example, the most common platforms include Binance. Another platform includes Coinbase, Kraken, Gemini, FTX, etc. When it comes to choosing the correct platform for you, it depends on how much you want to invest. In Europe, we also have apps, for example, Revolut and eToro, which offer you the possibility of not buying the entire crypto, but buying a portion of that crypto for a fraction of the price. So if you're not a very keen investor, or if you're investing a small amount of money over time, and if you're investing a small amount of money and not wanting to trade on a regular basis, eToro and Revolut might be better options, although the fees on these platforms might be slightly higher compared to Binance or compared to Coinbase. If you're not using them on a very regular basis, then the fees might not be so much that they add up over time, of course. Revolut offers you a variety of options for trading. You can also trade stocks on Revolut as well as cryptocurrencies. The advantage of Revolut is that it offers you a free trade every month. Before, it used to be 3 free trades a month. Now it went down to 1 free trade a month. However, this depends on whether you opt to choose for other premium options or not. However, when it comes to cryptocurrency investments, the best platforms, in my opinion, for investing in cryptocurrencies are, of course, Binance, Kraken, and Coinbase. Why? Because they offer the lowest fees. When it comes to user friendliness and ability to use the platform, Coinbase and Kraken might be better than Binance because they are simpler to use. So if you're a beginner at investing in crypto, you might find Kraken and Coinbase, both are very secure platforms, quite simple and less daunting when it comes to investing compared to Binance. Binance has an advantage because it offers lower fees than the other two platforms. Binance is not regulated in the USA, therefore if you're coming from the USA, you'll have to use Binance.us. However, Binance is a regulated platform. It offers a very good amount of security with two-factor authentication and other forms of non-phishing security codes where you can select in your profile, and it also offers the lowest fees on the market. Therefore, investing in Binance might be the cheaper option if you're trading large volumes on a daily basis, and if you're less of a daily trader or a weekly trader, you can opt for the cheaper options overall, which would be Coinbase and Kraken. Okay, Coinbase and Kraken, if you're still a beginner and trading a couple of times a month or a couple of times every 2 months, then I would stick personally to Kraken or to Coinbase. Although the fees might be higher, where you, for example, have a fee range of around 0.5 maker-taker fees and around 3.75% on card deposits. Although the fees might seem to be higher onto these platforms, if you're trading on a very limited basis, of course, you're also trading less fees, and therefore it would be a better option to use a user-friendly platform, something that you understand. You're going to make better investments than to use something that is so complicated and you're going to lose more money than you're making. When you buy your cryptocurrency, it's also extremely important to store your cryptocurrency in a wallet. Although these platforms have an inbuilt wallet within them, storing your crypto in a ledger wallet is the best idea because it is the safest option. This depends, of course, on the amount you're storing. If you're storing a small quantity of funds in crypto, choosing a wallet would be the best option for you. Our money is not only there for us to spend on what we want, on food, etc. Of course, we have to eat, we have to dress, we have to, pay our rent, our electricity bills, etc. However, money has to be seen as a tool, and therefore your income is not only there for you to spend on material goods. Like, everyone wants the Ferrari or the Lamborghini, everyone wants the nice BMW. However, putting your money into investments is a safe way for the future in order for us to have a more comfortable life in the future by passive income and by better profits on our investments, rather than keeping the money in the bank where the money will stagnate and will deflate with time due to inflation. So I hope this video was interesting, guys. Thanks for watching the video, guys. Subscribe to my channel. I really appreciate subscribers in this channel. Thanks for watching the video. See you next time.